You know, everyone talks about Dubai being the concrete jungle in the desert, but there's one community that completely redefining what Dubai living can look like. We're talking about Tilal Al Ghaf, a place surrounded by 70,000 square meters of crystal clear lagoon, white sandy beaches, and more green space than most people think is possible in the UAE. But here's what really interesting from an investment perspective. While everyone's being chasing the glitzy high-rises and the marina apartments, Tilal Al Ghaf has quietly become one of Dubai's strongest performing property investments. We are talking about 38% villa price appreciation since launch, rental yields hitting 6 to 8%, and something I rarely see in Dubai property, genuine waiting list for specific projects. Today, I want to show you why Tilal Al Ghaf represents more than just another luxury community. This is Dubai's green investment revolution, and if the numbers I'm seeing are correct, we might be looking at the blueprint for Dubai's next decade of residential development. Let's talk about something that usually makes investors nervous: sustainability initiatives. Typically, when developers start talking about eco-friendly this and green that, investors worry about higher costs and lower returns. Tilal Al Ghaf proves that's completely wrong. Here's what makes this place different. Majid Al Futtaim didn't just slap some solar panels on buildings and called it green. They have created a community where sustainability actually drives property value higher, not lower. We're talking about air quality that's 20% cleaner than neighboring areas. Outdoor temperatures run 5 degrees cooler, and energy efficient systems that genuinely reduce living costs for residents. But here's the kicker. This isn't just feel-good marketing. The numbers prove it works. House and house data shows rental yields ranging from 6 to 8%, which outperforms Dubai's average. Properties with lagoon views and park access command premium rents because residents actually want to live here, not just invest and flip. The sustainability features that matter to investors include smart streets, lighting system that reduces community fees, water conservation system that keeps utility costs down, and extensive green spaces that maintain property value better than communities depend on artificial amenities that require constant maintenance. What's really smart about Majid Al Futtaim's approach is they have proven that green doesn't mean expensive. It means efficient, comfortable, and ultimately more profitable for everyone involved. Here's something most investors don't fully understand: the psychological and financial impact of water features on property values. Tilal Al Ghaf's centerpiece isn't just a pretty lagoon, it's a 70,000 square meters value driven that creates rental premiums and appreciation patterns you simply can't replicate with traditional amenities. Let me show you what I mean with real numbers. Properties with direct lagoon views are commanding 15 to 25% rental premiums over similar units without water views. That's not a small difference. That translates to 30 to 40,000 dirhams additional annual rental income on a typical villa. The lagoon also creates what I call stickiness for tenants. Families who move here for the beach lifestyle, water sports, and resort feeling tend to stay longer, reducing vacancy periods and tenant turnover costs. That stability translates directly to better investor returns and more predictable cash flows. But here's what's really interesting. The lagoon effect extends beyond just waterfront properties. Even units that are 2 or 3 rows back from the water benefit from the overall community appeal and lifestyle positioning. The entire community commands premium pricing because of the lagoon's presence. Compare this to traditional amenities like gyms or pools. Those require ongoing maintenance costs and eventually need replacement. A well-designed lagoon like this actually appreciates in value as vegetations mature and the ecosystem develops. It's an asset that gets better with time rather than wearing out. For investors, this means you're not just buying into current rental income, you're buying into a community asset that will likely drive stronger appreciation over time compared to areas dependent on traditional depreciating amenities. One thing that separates successful investors from everyone else is understanding development timing and phasing. Tilal Al Ghaf offers a masterclass in how to benefit from master planned community development without taking on excessive construction risk. Here's the current situation. Early phases like Elan, Harmony, and Aura are already delivered and generating rental income. You can buy completed properties today and start earning returns immediately. But here's the smart play. Upcoming phases like Alaya Beach and Serenity Mansions offer the opportunity to get it at a better price price before the full community amenities are operational. The phasing strategy is brilliant from an investment perspective. Each completed phase increases the overall community value, which benefits earlier buyers. When someone buys in Alaya Beach at today's pricing, they're not just buying a villa, they're buying into the future completion of schools, retail centers, healthcare facilities, and additional recreational amenities. Valerissimo's analysis shows this progression clearly. Villa prices have already appreciated 38% since launch, and we're still in the early phases of community development. As amenities like the GEMS School, Community Retail Center, and expanded lagoon facilities come online, that appreciation trajectory should accelerate. The key insights for investor is timing your entry based on your investment timeline. Want immediate income? Buy in a completed phase. Want maximum appreciation? Consider pre-construction purchases in upcoming phases with solid delivery track record. But here's what's crucial. Unlike many Dubai developments where phasing creates uncertainty, Tilal Al Ghaf's phases are designed to be self-contained and functional. Each phase delivers a complete living experience, so you're not dependent on future completions for basic lifestyle appeal. Here's a trend that's reshaping Dubai's entire property market. The Tilal Al Ghaf is leading the change. The shift towards end-user demand, driving investment returns rather than speculative flipping. This is huge for serious investors. What I'm seeing in communities like Tilal Al Ghaf is genuine family choosing to live here long-term, not just investors looking for quick flips. QBD's 2025 analysis shows Dubai's market is increasingly balanced between investors and end users, and Tilal Al Ghaf skews heavily towards end user appeal. Why does this matter for your returns? End user demand creates more stable markets, longer tenancy periods, and appreciation based on actual lifestyle values rather than speculation. When families genuinely want to live somewhere, they pay premium rents and stay longer, which translates to better investor returns. The numbers supporting this trend. Buyout data shows Tilal Al Ghaf rental properties averaging 258,000 dirhams annually for a townhouse, with strong occupancy rate and minimal vacancy periods. That's not speculative pricing, that's genuine market demand from residents who value their lifestyle. What's driving the end user appeal is the combination of factors you can't easily replicate. The lagoon lifestyle, extensive green space, family-friendly design, proximity to good schools, and the peace of mind that comes with Majid Al Futtaim's track record of long-term community management. For investors, this end-user focus means your property isn't just competing with other rental units, it's competing with primary residence options. When tenants are choosing where to live rather than just where to rent, they make decisions based on lifestyle, quality, community amenities, and long-term satisfaction. That drives both higher rents and longer tenancy periods. Location drives property values, and Tilal Al Ghaf's positioning demonstrates perfect timing for Dubai's infrastructure development patterns. This isn't just about where it is today, it's about where Dubai is heading over the next decade. Currently, Tilal Al Ghaf benefits from strategic placement along Sheikh Zayed Road and Sheikh Mohammed bin Zayed Road, providing quick access to downtown Dubai, Dubai Marina, and Dubai International Airport. But here's the forward-looking advantage. The community is positioned to benefit from Dubai's southern expansion and the continuing development of Dubai Land Corridor. 3S Broker's analysis highlights the connectivity advantages perfectly. Residents can reach key business districts quickly while living in a resort-style environment that feels completely removed from urban density. That combination is rare in Dubai's market and commands premium pricing. The upcoming infrastructure development favors Tilal Al Ghaf's location even more. As Dubai continues expanding southward, communities like these become more central rather than peripheral. The Al Maktoum International Airport expansion, Expo City development, and continued business district growth in areas like Dubai South all support Tilal Al Ghaf's long-term location value. For investors, location timing is crucial. You want to buy into areas before major infrastructure improvements drive up prices, but after enough development exists to ensure the improvements will actually happen. Tilal Al Ghaf hits the sweet spot perfectly. The transport links also support rental demand from different demographic groups. Professionals working in Dubai's various business districts can easily commute, while families appreciate the peaceful residential environment. That diverse appeal broadens your potential tenant base and supports stable rental income. Let's talk about something that separates successful property investments from disasters: developer credibility. When you're buying into a master planned community, you're not just buying a property, you're buying into a long-term development and management commitment. With Majid Al Futtaim, you're getting one of the region's most proven operators. Here's what makes MAF different from typical developers. They don't just build and disappear, they operate long-term. Think about Mall of the Emirates, city center locations, Carrefour stores. These aren't quickly developed plays. MAF builds businesses and communities that plan to operate for decades. That operational commitment translates directly to property values. When residents know the community amenities will be maintained, upgraded, and professionally managed long-term, they're willing to pay premium rents and purchase prices. It's the difference between buying into a development and buying into an institution. The track record speaks for itself. MAF's previous residential projects have maintained their value and community standards over time, which is crucial for long-term property appreciation. Now compare that to developers who hand off management to third parties or cut costs on community maintenance once initial sales are complete. From an investment perspective, this developer backing provides several advantages: predictable community fee structure, consistent amenity maintenance, ongoing infrastructure improvements, and the financial stability to weather market downturns without compromising community standards. The brand recognition also matters for rental appeal. When potential tenants hear Majid Al Futtaim community, they immediately understand they are looking at a premium development with professional management. That brand equity translates to faster rental absorption and tenants' willingness to pay premium rates. Let's get into specific numbers that should interest serious investors. Tilal Al Ghaf isn't just delivering theoretical rental yields, it's producing actual returns that outperform many established Dubai communities. Based on the current market data, townhouses in Tilal Al Ghaf are achieving rental yields between 6 to 8%, with large villas hitting the higher end of that range. To put that in perspective, Dubai's average rental yield across all property types is around 6.9%. So Tilal Al Ghaf is performing at or above market average despite being a premium community. Here's a breakdown by property type. 3-bedroom townhouses priced around 3 to 3.5 million dirhams are renting for about 220 to 260,000 dirhams annually. 4-bedroom villas in the 4 to 5 million dirham range are commanding 280,000 to 320,000 dirhams in annual rent. Those numbers translate to solid 6.5 to 7.5% yields before factoring in appreciation. But here's what's really interesting: the rental premiums for lagoon views and beachfront properties. Units with direct water access are commanding 15 to 20% rental premiums over similar properties without water views. That premium is sustainable because the lagoon lifestyle is irreplaceable. You can't add 70,000 square meter lagoon to another community. The rental market stability is equally important. Tilal Al Ghaf's properties are showing lower vacancy rates and longer tenancy periods compared to typical Dubai rental properties. When families move here for the lifestyle, they tend to stay longer, which reduces your turnover costs and vacancy periods. From a cash flow perspective, these yields are particularly attractive because they are supported by genuine end-user demand rather than speculative pricing. That means the rental income is more predictable and sustainable over time. Villa prices in Tilal Al Ghaf has appreciated 38% since launch, but the numbers only tell part of the story. What's driving this appreciation, and more importantly, is it sustainable? The appreciation drivers are both immediate and long-term. Immediate drivers include the completion of community amenities, the lagoon becoming fully operational, and residents moving in to create an active community atmosphere. Each of these milestones has historically driven property values higher in the community. Long-term appreciation drivers are even more compelling. The master plan shows significant additional amenities coming online over the next 3 to 5 years. Expanded retail options, additional schools, healthcare facilities, and recreational amenities. Each completion should drive further value appreciation. But here's what's really driving values: scarcity. Dubai has many apartment communities, many villa communities, but very few lagoon communities with scales and quality. As Dubai population continues to grow, the residents seeking alternatives to high-rise living, communities like Tilal Al Ghaf becomes increasingly valuable. The comparison to similar lagoon communities is telling. The Amak lagoons, while newer, already show pricing appreciation patterns similar to Tilal Al Ghaf. The difference is Tilal Al Ghaf has Majid Al Futtaim operational commitment and more mature infrastructure. infrastructure, which should support more stable, long-term appreciation. Market analysts project continued appreciation driven by Dubai's southern expansion, infrastructure development, and the growing preference for resort-style living among Dubai's residents. The key question isn't whether values will appreciate, but how quickly and how much. For investors, the appreciation story is compelling because it's based on the fundamental value creation rather than speculation. Real amenities, real lifestyle appeal, and real end-user demand create sustainable appreciation patterns. And of course, let's be realistic about the risks, because every investment has them. Tilal Al Ghaf's success depends on several factors that investors need to understand and monitor. First, master-planned community risk. The full value proposition depends on completing all planned amenities and maintaining community standards over time. While Majid Al Futtaim has a strong track record, delays or changes to the master plan could impact property values. Second, location dependency. Tilal Al Ghaf's appeal partly depends on its position relative to Dubai's business district and infrastructure. Major changes to Dubai's development patterns or transportation infrastructure could affect the community's relative attractiveness. Third, market segment risk. The community targets families and lifestyle-focused residents, rather than investors seeking to maximize rental yields. If Dubai's demographic pattern shifts significantly, this could impact demand for family-oriented communities. Fourth, maintenance and community fee risks. Lagoon communities require ongoing maintenance of water features, landscaping, and recreational amenities. Rising maintenance costs could impact both rental yields and resale appeal over time. Fifth, regulatory risks. Changes to Dubai's property ownership regulations, visa policies, or taxation could affect foreign investors' demand for communities like Tilal Al Ghaf. However, most of these risks are manageable or shared with other Dubai property investments. The key is understanding them and factoring them into your investment timeline and return expectations. If you are interested in Tilal Al Ghaf, here's how to approach it strategically. The community offers different investment opportunities depending on your timeline, budget, and risk tolerance. For immediate income generation, focus on completed phases like Ilan, Harmony, and Ara. These offer immediate rental income potentials with established community amenities and proven rental demand. Prices are higher than pre-construction options, but you eliminate construction and delivery risk. For maximum appreciation potential, consider upcoming phases like Alaya Beach or Serenity Mansions. These offer lower entry prices but require patience for completion and community development. The appreciation potential is higher, but so is the risk profile. Property type selection matters significantly. 3 and 4 bedroom townhouses seem to offer the best balance of rental yield and appreciation potential. Larger villas command higher absolute rents but may have smaller tenant pools. Smaller townhouses might face more competition from similar properties. Location within the community is crucial. Lagoon front and beach properties command significant premiums but also deliver higher rental returns. Properties near planned amenities like schools or rental centers might offer better long-term appreciation prospects. Payment plan strategy can optimize your returns. Many Tilal Al Ghaf projects offer extended payment plans that can improve your cash-on-cash returns, but make sure you understand the total implications and completion timelines. Consider this as part of a diversified Dubai portfolio rather than a standalone investment. Tilal Al Ghaf offers specific lifestyle appreciation characteristics that complement other Dubai property types rather than replacing them. Now let's talk about where Tilal Al Ghaf is headed over the next 5 to 10 years, because that vision drives today's investment opportunity. The master plan reveals a community that still is in its early development phases with significant growth potential. The retail and commercial development phase is just beginning. Plans include expanded shopping and dining options, business centers, and service providers that will make the community more self-contained. This reduces residents' need to travel for daily needs, which typically drives property value higher. Educational infrastructure expansion is crucial for family appeal. Additional schools, tutoring centers, and educational facilities will make the community more attractive to families with children, which tend to drive longer tenancy periods and premium rents. Healthcare facilities development will serve the growing community population while adding another layer of convenience that supports property value. Medical centers and clinics within the community reduce travel requirements and enhance quality of life. The lagoon and recreational amenities will continue expanding. Additional beach areas, water sports facilities, and recreational options will enhance the resort-style appeal that drives premium pricing. These amenities differentiate Tilal Al Ghaf Ghaf from traditional villa communities. Transportation connectivity improvements are planned to reduce commute time to major business districts. Better connectivity typically drives property appreciation by expanding the potential resident base to include professionals working in different areas of Dubai. The long-term vision positions Tilal Al Ghaf as a complete lifestyle destination rather than just a residential community. That evolution from residential development to lifestyle destination typically drives significant property appreciation over time. Tilal Al Ghaf isn't the only community targeting eco-conscious residents, so let's see how it compares to other green developments in Dubai. This comparison helps understand the competitive positioning and investment appeal. Damak lagoons offer similar lagoon living concepts but with different execution and developer backing. While newer and potentially more affordable Damak lagoons lacks Majid Al Futtaim's operational track record and integrated retail entertainment expertise, the sustainable city offers a different approach to green living, focusing more on renewable energy and organic farming than lagoon lifestyle. While pioneering in sustainability, it targets a more niche market and may have limited appreciation potential compared to mainstream luxury communities. Arabian Ranches and Al Barari offers established green community living with mature landscaping and amenities. However, they lack the lagoon elements that makes Tilal Al Ghaf unique, and their appreciation potential may be limited by their maturity. Ghaf Woods by MAF represents another green development approach, focusing on forest-style living rather than lagoon lifestyle. While sharing MAF's developer advantage, it targets different demographics and lifestyle preferences. What makes Tilal Al Ghaf unique is the competitive landscape and the combination of lagoon lifestyle, green design, MAF operational backing, and strategic location. The combination is difficult for competitors to replicate and creates sustainable competitive advantage for property values. The investment thesis is that Tilal Al Ghaf offers the most complete package: proven developer, unique lifestyle proposition, strong financial fundamentals, and scarcity value that competitors struggle to match. After analyzing all the factors, rental yields, appreciation potential, developer backing, location advantages, and competitive positioning, here's my honest assessment of Tilal Al Ghaf as an investment opportunity. The strengths are compelling: 38% appreciation since launch, 6 to 8% rental yield, Majid Al Futtaim's operational backing, unique lagoon lifestyle, strong end-user demand, and favorable location positioning for Dubai's southern expansion. These aren't speculative advantages, they are documented market realities. The investment thesis is solid. Dubai's growing population increasingly values lifestyle-focused communities. Lagoon living provides impeccable appeal, master plan development creates ongoing value appreciation, and MAF's track record suggests sustainable long-term community management. The risks are manageable. Completion timelines, maintenance costs, and market dependencies are concerns shared with other Dubai property investments. The key is understanding these risks and investing with appropriate timelines and return expectations. The opportunity timing looks favorable. We're still in the early phases of community development, so investors can benefit from ongoing amenity completions and community maturation. But enough infrastructure exists to generate immediate rental income and prove the concept's viability. My assessment: Tilal Al Ghaf represents one of Dubai's most compelling long-term residential investment opportunities. It's not a quick flip play, but for investors seeking quality community with strong fundamentals and a 5 to 10 year holding period, it offers attractive risk-adjusted returns. The key is approaching it strategically. Understand the phasing, choose appropriate property types, factor in all the costs, and view it as part of a diversified portfolio rather than a standalone investment. If you're serious about exploring Tilal Al Ghaf opportunities or want guidance on building a strategic Dubai property portfolio, join me for our exclusive weekly webinars where we analyze current market opportunities, review specific projects, and provide personalized investment guidance. Every Saturday, we examine real investment scenarios, break down market trends, and help investors make informed decisions based on current market conditions rather than marketing material. Tilal Al Ghaf represents Dubai's green investment future, but successful investing requires understanding in both the opportunities and the execution strategy.